Let's delve into the world of automated trading with FXCM, a prominent online trading platform. FXCM provides access to a wide range of financial instruments and powerful tools for both retail and institutional traders. This includes a robust RESTful API and the FXCmpy Python package, which are pivotal for building and deploying sophisticated, automated trading strategies. Whether you're a seasoned professional or just starting your trading journey, FXCM offers a platform designed to accommodate diverse trading styles and capital levels. The platform supports trading various financial products, including currency pairs, FX, contracts for difference, CFDs, on indices, commodities, and rates. Before we proceed, it's imperative to address the inherent risks associated with trading. Disclaimer: trading forex/CFDs on margin carries a high level of risk and may not be suitable for all investors. The potential for profit is coupled with the risk of loss, and you could lose more than your initial deposit. Leverage can magnify both profits and losses. Before trading, carefully consider your financial situation, risk tolerance, and investment objectives. This guide provides educational information and should not be considered investment advice. Market commentary is for informational purposes only. Neither FXCM nor the author of this content will be liable for any losses incurred as a result of using the information presented. Please be aware of regional restrictions that may apply. For example, certain regulations may affect retail clients in specific jurisdictions. FXCM's platform, a detailed examination. FXCM's platform is built to cater to a wide spectrum of trading needs, from those employing simple strategies to those requiring complex, automated systems. Let's break down the key aspects of the platform, focusing on its instruments, supported strategies, costs, and the underlying technology. Available instruments. FXCM offers a diverse array of financial instruments, allowing traders to diversify their portfolios and capitalize on various market movements. The primary instruments available include FX products, currency pairs. These are the core of FXCM's offerings. Traders can speculate on the exchange rates between various currencies, such as Euro/USD, GBP/USD, USD/JPY, and many more. The platform provides real-time price feeds, allowing for dynamic trading decisions. CFDs on stock indices. CFDs allow traders to speculate on the performance of major stock market indices, such as the S&P 500, FTSE 100, and DAX 30, without owning the underlying assets. This provides opportunities to go long or short, leveraging market volatility. CFDs on commodities. Traders can access CFDs on a wide range of commodities, including precious metals like gold and silver, energies like crude oil and natural gas, and agricultural products. CFDs on rates products. FXCM offers CFDs on interest rate products, allowing traders to speculate on the future direction of interest rates. Supported trading strategies. FXCM API platform supports a variety of trading strategies, catering to both short-term and long-term approaches. Key features include leveraged long and short positions. Leverage is a core feature of FXCM's offerings, allowing traders to control larger positions with a relatively small amount of capital. This amplifies both potential profits and potential losses. Market entry orders. Traders can execute trades at the prevailing market price using market orders. Stop-loss orders. These orders automatically close a position when the price reaches a specified level, limiting potential losses. Take profit targets. These orders automatically close a position when the price reaches a specified profit level, securing gains. Trading costs. Understanding the costs associated with trading is crucial for profitability. FXCM primarily generates revenue through bid-ask spread. This is the difference between the buying, ask, and selling, bid, prices of a currency pair or CFD. The spread is a critical cost factor, and FXCM strives to offer competitive spreads. Fixed fees. Some instruments may incur fixed fees, such as commissions. These fees are usually transparently displayed within the trading platform. Technology, the RESTful API and FXCmpy. The technological backbone of FXCM is its robust RESTful API. This API allows traders to programmatically interact with the platform, enabling automated trading systems, custom indicators, and data analysis tools. The FXCmpy Python package acts as a wrapper around the API, simplifying the process of interacting with the platform. Jurisdictions and regulations. FXCM operates in various jurisdictions worldwide, but product availability may vary based on local regulations. It's essential to verify the availability of specific instruments and services based on your region before trading. Regulatory compliance is a priority for FXCM, ensuring a secure and transparent trading environment. Chapter Overview: Navigating the FXCM API with FXCmpy. This chapter will focus on the fundamentals of the FXCM Trading API and the FXCmpy package. We will delve into the core functionalities that empower you to automate your trading strategies, analyze market data, and manage your account programmatically. The chapter is structured to provide a clear and concise learning path. Getting started, this section guides you through the initial setup, including obtaining API credentials and installing the FXCmpy package. Retrieving data, we explore how to access real-time and historical market data, including price feeds, order books, and account information. Working with the API, this section covers the core API functionalities, such as placing and managing orders, accessing account details, and handling events. Let's begin by setting up the necessary environment and getting acquainted with the FXCmpy package. Getting started, setting up your environment. Before diving into the API, we need to set up our development environment. This involves installing the FXCmpy package and obtaining the necessary API credentials. 1. Installing fxcmpy. The FXCmpy package is easily installed using pip, Python's package installer. Open your terminal or command prompt and execute the following command. Here is code. To get the code, please check on epicode.substack.com or visit the YouTube channel 1PatchCode. This command downloads and installs the latest version of the FXCmpy package and its dependencies. 2. Obtaining API credentials. To access the FXCM API, you'll need API credentials. You can obtain these credentials by opening a demo account. This is the recommended starting point. You can create a demo account on the FXCM website. This allows you to test your strategies without risking real capital. Opening a live account. Once you're comfortable with the demo account and your strategies, you can open a live account to trade with real funds. After creating your account, you'll receive a username and password. You use these credentials to authenticate your API requests. Additionally, you'll need a server type, demo or real, that indicates the server to connect. 3. Basic authentication and connection. With FXCmpy, establishing a connection to the FXCM API is straightforward. It is a basic example. Here is code. To get the code, please check on epicode.substack.com or visit the YouTube channel 1PatchCode. In this code, we first import the FXCmpy library. Then, we define the token and server variables, replacing placeholders with your actual credentials. The FXCmpy class is instantiated to create a connection to the FXCM server. The log level parameter is set to error, which means only error messages are displayed. The code includes a try except block to handle potential connection errors gracefully. Finally, the connection is closed using con.close when the operations are complete. Retrieving data, accessing market information. One of the most crucial aspects of trading is accessing and analyzing market data. The FXCmpy package provides convenient methods for retrieving real-time and historical data. 1. Getting real-time prices, tick data. Tick data represents the latest bid and ask prices for a specific instrument. The hit last trade method retrieves the last trade price. Let's see how to get the last trade price for Euro/USD. Here is code. To get the code, please check on epicode.substack.com or visit the YouTube channel 1PatchCode. In this snippet, after establishing a connection, we specify the instrument, EUR/USD. The hit last trade method retrieves the last traded price. The code includes error handling to catch potential issues with data retrieval. 2. Retrieving historical data, candlestick charts. Historical data is essential for performing technical analysis and backtesting trading strategies. The candlestick method allows us to retrieve historical candlestick data. The following example fetches 101-hour H1 candles for Euro/USD. Here is code. To get the code, please check on epicode.substack.com or visit the YouTube channel 1PatchCode. Here, we specify the instrument, the time period, M1, for 1 minute, H1, for 1 hour, D1, for 1 day, and the number of candles to retrieve. The get candles method returns a pandas data frame containing the open, eq, low, close, and volume, oik, data for each candle. The code includes a check to ensure that data was retrieved successfully and then prints the header of the data frame. 3. Accessing available instruments. Understanding the instruments available for trading is crucial. The API provides a way to list available instruments. Here is code. To get the code, please check on epicode.substack.com or visit the YouTube channel 1PageCode. This code retrieves a list of all tradable instruments. This is useful for dynamically selecting instruments for your trading strategies. The getInstruments method provides the list. Working with the API, core trading functionality. Now, let's explore the core API functionalities that enable you to place and manage orders and access account information. 1. Placing market orders. A market order is an instruction to buy or sell an instrument immediately at the best available price. It is how you can place a market order using FXCMPy. Here is code. To get the code, please check on epicode.substack.com or visit the YouTube channel 1PageCode. In this example, we specify the instrument, the trade direction, side can be, buy, or, sell, and the amount to trade. The openTrade method places the market order. The function returns the order ID upon successful order placement. 2. Placing limit orders. A limit order is an instruction to buy or sell an instrument at a specific price or better. Let's create an example of a limit order. Here is code. To get the code, please check on epicode.substack.com or visit the YouTube channel 1PageCode. In this code, we create a limit order with a specific limit price. The createLimitOrder function places the order. 3. Placing stop orders. A stop order is an instruction to buy or sell an instrument once its price reaches a specific level. These can be used for stop loss or stop entry orders. Here is code. To get the code, please check on epicode.substack.com or visit the YouTube channel 1PageCode. Here, we create a stop order by specifying the stop price. The createStopOrder function is utilized for this. 4. Modifying and canceling orders. The API also allows you to modify and cancel existing orders. Modifying an order is an important aspect of risk management. Here is code. To get the code, please check on epicode.substack.com or visit the YouTube channel 1PageCode. The code presents examples of how to modify a stop order or a limit order using their respective methods. It also includes an example of canceling an order using closeTrade. 5. Accessing account information. Accessing your account information is crucial for monitoring your positions and managing your funds. Here is code. To get the code, please check on epicode.substack.com or visit the YouTube channel 1PageCode. This code retrieves the account summary, open positions, and closed positions. The getAccount summary, getOpenTrades, and getCloseTrades methods are used. The open and closed positions are returned as pandas data frames. Conclusion. This chapter provided a foundational understanding of the FXCM Trading API and the FXCMPy package. We covered the essential steps for connecting to the API, retrieving market data, and placing and managing orders. This foundational knowledge is critical for developing automated trading strategies. As you progress, you can build upon these concepts to implement more complex strategies, incorporate risk management techniques, and integrate advanced data analysis. Remember to always test your strategies thoroughly in a demo environment before deploying them in a live trading account. This comprehensive introduction to the FXCM API empowers you to begin your journey in automated trading. Before diving into the exciting world of algorithmic trading with the FXCM API, a solid foundation is essential. This section provides a comprehensive guide to the initial setup, ensuring you are well equipped to connect to the API and begin developing your trading strategies. For in-depth information on the FXCM API's capabilities and functionalities, please refer to the official documentation available at https://orel.li/df7e. This documentation is your primary resource for understanding all the available methods, data structures, and error handling mechanisms. The first step involves installing the FXCMPy Python package, which serves as the bridge between your Python code and the FXCM API. This package simplifies the process of interacting with the API, handling authentication, data retrieval, order placement, and more. Installation is straightforward using pip, Python's package installer. Open your terminal or command prompt and execute the following command. Here is code. To get the code, please check on epicode.substack.com or visit the YouTube channel 1PatchCode. This command will download and install FXCMPy and its dependencies, making it ready for use in your Python projects. After successful installation, you are ready to proceed to the next crucial step, obtaining an FXCM demo account. A demo account is an invaluable resource for testing your trading strategies without risking real capital. FXCM provides free demo accounts, allowing you to simulate trading in a risk-free environment. This is the ideal setting to experiment with your algorithmic trading ideas, debug your code, and familiarize yourself with the API's functionalities before venturing into live trading. To obtain a demo account, visit the FXCM website, navigate to the FXCM website and locate the demo account registration page. The specific URL may change, so it's best to search for FXCM demo account on their website. Complete the registration form. Fill out the registration form with the required information, typically including your name, email address, and desired account currency. Verify your email. You'll likely receive a verification email to confirm your email address. Click the verification link provided in the email. Access your demo account. Once your email is verified, you should receive your demo account credentials, including your username and password. With your demo account credentials in hand, the next step is to generate an API token. The API token is the key that unlocks access to the FXCM API. It acts as a unique identifier, authorizing your application to interact with your demo or live trading account. The API token is essential for authentication and is required in all API requests. To generate your API token, log into your FXCM demo account. Use your demo account credentials to log into the FXCM trading platform or the FXCM website's client area. Navigate to the API settings. Within the platform or client area, locate the API settings or API access section. The exact location may vary depending on the platform version. Generate your API token. There should be an option to generate a new API token. Click the Generate Token or similar button. Copy your API token. The system will generate a unique API token for your account. Crucially, copy this token and store it securely. You will need it to connect to the API from your Python code. Treat this token like a password, never share it with anyone. Now that you have installed the FXCMPy package and obtained your API token, you are ready to connect to the FXCM API. Connecting to the FXCM API requires authenticating your application with your API token. The FXCMPy package makes this process simple through the instantiation of an FXCMPy object. Here is the basic code to establish a connection. Here is code. To get the code, please check on epicode.substack.com or visit the YouTube channel 1PatchCode. Let's break down this code. Import FXCMPy. This line imports the FXCMPy package, making its functions and classes available in your code. API igual a FXCMPy.FXCMPy, access token igual a, FXCMPy token, log level equals, error. This is the core line that establishes the connection. FXCMPy.FXCMPy, this instantiates the FXCMPy object, which represents the API connection. Access token igual a, FXCMPy token, this is the most important parameter. Replace while your FXCM API DOKN with the API token you generated in your FXCM demo account. This token authenticates your connection. Log level equals, error, this parameter controls the verbosity of the API's logging output. Setting it to, error, minimizes the output, showing only error messages. These can be helpful for keeping your console clean during development. Other options include, debug, info, warning, and, critical. The commented outlines demonstrate how to interact with the API after establishing the connection. The API.getInstruments method retrieves a list of available trading instruments. The API.close method closes the connection, releasing resources. It's good practice to close the connection when you are finished. While the direct approach using the access token parameter is functional, using a configuration file offers a more organized and flexible way to manage your API credentials and settings. This is particularly useful if you have multiple API tokens, different server configurations, demo VS Live, or other settings that you want to easily modify. To use a configuration file, you'll need to create a CFG file, algo.cfg, and populate it with your API settings. The structure of this configuration file is based on the config parser module in Python. We will assume you have created this file as described in a previous section. Here is how to amend the configuration file with the relevant content. Here is code. To get the code, please check on epiccode.substack.com or visit the YouTube channel 1PatchCode. Let's break down the configuration file, FXCM. This section header identifies the settings as belonging to the FXCM configuration. Log level equals error. This setting is the same as the log level parameter discussed earlier. It controls the verbosity of the API's logging output. Log file equals path to and name of log file. This setting specifies the path and file name for your log file. The API will write log messages to this file. Replace pathto file ogfile with the actual path and file name, eje, /users /joe username fxcmlog.txt. This is optional but highly recommended for debugging and monitoring. Access token equals your FXCM token. This crucial setting stores your API token. Replace while your FXCM API token with your actual API token. Once you have created and populated your configuration file, you can use it to connect to the API. With your configuration file in place, connecting to the API becomes even simpler. Instead of passing the access token directly, you simply tell FXCmpy to use your configuration file. It is the code to connect using the configuration file. Here is code. To get the code, please check on epiccode.substack.com or visit the YouTube channel 1PatchCode. In this code, the API equals fxcmpy.fxcmpy, config file equals pyalgo.cfg, line tells the FXCmpy object to read its settings from the pyalgo.cfg file. The access token and log level will be automatically loaded from the configuration file. By default, the connection is made to the demo server. This is a crucial detail. If you are using a demo account, you should not need to change anything. If you are using a real account, you must specify the real server. The FXCmpy package provides the server parameter for this. To connect to the demo server explicitly, though it's the default, you can use the following. Here is code. To get the code, please check on epiccode.substack.com or visit the YouTube channel 1PatchCode. To connect to the live trading server, you must set the server parameter to real. Here is code. To get the code, please check on epiccode.substack.com or visit the YouTube channel 1PatchCode. Important considerations: server selection. Always ensure you use the correct server setting, demo or real, based on your account type. Connecting to the wrong server will result in errors, and attempting to trade on a live account using a demo account connection will fail. Account type: the server parameter must match the type of account you are using. If you are using a demo account, use server equals demo. If you are trading with a live account, use server equals real. Testing: before deploying any trading strategy to a live account, thoroughly test it on a demo account. This allows you to identify and fix any potential errors without risking real capital. Security: protect your API token in your configuration file. Do not share your token with anyone, and store your configuration file in a secure location. Consider encrypting the configuration file if you are concerned about unauthorized access. Having established a connection to the FXCM API, you are now ready to explore the wealth of trading functionalities it offers. The next steps involve data retrieval. Learn how to retrieve historical price data, OHLC, open, EEC, low, close, real-time quotes, and other market information. Order management. Master the art of placing, modifying, and canceling trading orders, market orders, limit orders, stop orders, etc. Risk management. Implement strategies to manage your trading risk, including setting stop-loss orders, take-profit orders, and position sizing. Strategy development. Begin developing and backtesting your trading strategies based on your chosen market analysis techniques. The FXCmpy package provides a comprehensive set of methods for all these tasks. Remember to consult the official FXCM API documentation for detailed information on each method and its parameters. Building upon the foundation established in this section, you are well positioned to embark on your journey into algorithmic trading with the FXCM API. Having established the core principles of algorithmic trading and the crucial role of data feeds, we now turn our attention to a fundamental aspect: data retrieval. The ability to access and analyze historical market data is, without question, the bedrock upon which robust trading strategies are built. Backtesting, strategy optimization, and even real-time decision-making all depend on the availability of accurate, reliable, and readily accessible historical information. This section delves into the methods and resources available for acquiring this essential data, with a particular focus on how FXCM provides access to historical market prices. Understanding these methods is paramount for any aspiring algorithmic trader. FXCM, a well-regarded broker in the retail forex market, offers a valuable resource for algorithmic traders, access to historical market price data. This data is crucial for developing and testing trading strategies. FXCM's provision of this data is particularly beneficial because it provides a relatively accessible and straightforward method for obtaining the historical information needed to get started. The availability of reliable data is a significant advantage, allowing traders to focus their efforts on strategy development rather than struggling to find and process data from less reliable sources. FXCM provides historical data in what we can term a prepackaged variant. This approach simplifies the data acquisition process significantly. The prepackaged variant essentially refers to the availability of compressed files containing historical data directly from FXCM servers. These files are typically in a readily usable format, making the data immediately accessible for analysis and integration into trading algorithms. This eliminates the need for complex data parsing, cleaning, and formatting, which can be time-consuming and error-prone. The prepackaged format is a significant advantage for those just beginning their algorithmic trading journey. The prepackaged nature of the data is particularly advantageous. Let's examine how to access and use this data. FXCM typically provides data in CSV, separated values, format, which is a widely compatible format that can be easily opened in spreadsheet software like Microsoft Excel or Google Sheets, as well as programming environments like Python. Consider the example of tick data for the Euro/USD exchange rate during week 10 of 2020. These data would include information on every single trade, a tick, that occurred during that week, comprising the timestamp, bid price, ask price, and volume. Accessing this level of detail allows for granular analysis and backtesting. Here's a Python code example to demonstrate how to download and process this type of prepackaged data, assuming we have access to the data file. Here is code. To get the code, please check on epicode.substack.com or visit the YouTube channel OnePageCode. Now, let's break down this code step by step. Import libraries. The code begins by importing the pandas library, which is essential for data manipulation and analysis in Python, OS for interacting with the operating system, eje, creating directories, and zip file for handling zip archives. Define file paths. It defines the zip file path variable, which should point to the downloaded zip file containing the historical data. The extract path specifies the directory where the contents of the zip file will be extracted. This is a crucial step to ensure the data is readily accessible. Remember to replace EURUSD tick data week 102020.zip with the actual file name of the downloaded zip file. Directory creation checks if an extraction directory exists, and creates it if it doesn't. This is essential to avoid errors when extracting the zip file. Extraction function. The extract zip function takes the zip file path and extraction path as arguments. It uses the zip file module to extract the contents of the zip file to the specified directory. Comprehensive error handling is included to catch potential bad zip file exceptions, indicating a corrupted zip file, and other generic exceptions, providing informative error messages to the user. Load the data. The code attempts to load the CSV file, assuming it's named EURUSD-tickdata.csv inside the extracted zip file, into a pandas data frame using pd-rex. The code includes error handling to catch file not found error if the file cannot be found, pd-errors.parser error if the CSV file is not formatted correctly, and generic exception blocks. This ensures that the program is robust and provides useful feedback to the user in case of issues. Display the first few rows. If the data is successfully loaded, the code displays the first 5 rows of the data frame using df.head. This allows you to quickly inspect the data and verify that it has been loaded correctly. A check is performed to ensure the data frame df exists before attempting to display its contents, preventing errors if the file loading fails. Data inspection and descriptive statistics. Optional. The code then provides optional steps for basic data inspection, including calling df.info, to display information about the data frame, such as data types and non-null values, and calling df.describe, to display descriptive statistics, count, mean, standard deviation, etc., for numerical columns. These are crucial steps for understanding the data and identifying potential issues. Timestamp conversion. The code attempts to convert the timestamp column, assuming it is named either timestamp or timestamp, to datetime objects using PD to datetime. Converting timestamps to a datetime format is crucial for time series analysis and trading algorithms. Error handling is included to catch potential exceptions during the conversion process. This code snippet provides a complete end-to-end example of how to download, extract, and load the prepackaged historical data from FXCM. The inclusion of error handling and data inspection steps makes it a robust and practical example for real-world applications. Tick data, as mentioned earlier, represents the finest level of detail available for market price movements. Each tick represents a single trade or a quote update. Therefore, tick data provides the most granular view of market activity. Analyzing tick data allows traders to identify short-term trends, assess market liquidity, and potentially uncover patterns that might be invisible when looking at higher-level data like daily bars. The raw tick data will often include fields such as timestamp, the precise time the tick occurred; bid price, the highest price a buyer is willing to pay, the offer; ask price, the lowest price a seller is willing to accept, the bid; volume, the size of the trade, eje, the number of contracts or currency units traded. Analyzing this data requires a significant amount of processing power, but the potential benefits can be substantial. For instance, you might use tick data to calculate the bid-ask spread, analyze order flow, or develop high-frequency trading strategies. The more granular the data, the more potential it holds for extracting insights. The availability of historical data, such as the Euro/USD tick data for week 10 of 2020, unlocks a wide range of practical applications in algorithmic trading, backtesting trading strategies. The most fundamental use of historical data is for backtesting. This involves simulating the performance of a trading strategy on past market data to assess its historical profitability and risk profile. By running a strategy on the Euro/USD tick data for week 10 of 2020, you can determine how the strategy would have performed during that specific period. This allows traders to evaluate the potential of a strategy before deploying it in a live trading environment. Backtesting is a critical step in the development process, allowing for refinements and optimizations. Strategy optimization. Historical data is used extensively for optimizing trading strategies. You can tweak the parameters of your trading algorithm and then rerun the backtest on the historical data to see how those changes affect performance. This process allows you to find the optimal set of parameters that generate the best results. Optimization can involve fine-tuning entry and exit signals, adjusting stop-loss levels, or varying position sizing. Risk management. Historical data is essential for risk management. By analyzing past market behavior, you can assess the potential for drawdowns and estimate the maximum loss your strategy might incur. This information is vital for setting appropriate position sizes and managing overall portfolio risk. Analyzing the volatility of the Euro/USD during specific periods, eje, during week 10 of 2020, can inform risk management decisions. Performance evaluation. Historical data allows for detailed performance analysis. You can calculate various performance metrics, such as Sharpe ratio, Sortino ratio, and maximum drawdown, to evaluate the effectiveness of a trading strategy. Comparing the performance of different strategies on the same historical data can help you identify the most promising approaches. Market analysis. Historical data can be used for market analysis and to better understand the dynamics of the Euro/USD market. You can analyze historical trends, identify support and resistance levels, and assess the impact of economic events on price movements. This information helps you develop a deeper understanding of the market and improve your trading decisions. It's crucial to acknowledge that the quality of historical data can vary. While FXCM aims to provide accurate data, it is essential to consider the following: data gaps. There might be gaps in the data due to server outages, data feed issues, or other technical problems. Data errors. Occasionally, there might be errors in the data, such as incorrect prices or timestamps. Data cleaning. It's often necessary to clean and pre-process the data before using it for backtesting or analysis. This might involve handling missing values, correcting errors, and standardizing the data format. Data source reliability. Always consider the reputation and reliability of the data source. FXCM, as a regulated broker, has a strong incentive to provide accurate data. Spread and slippage. When backtesting, you must account for the bid-ask spread and potential slippage, the difference between the expected price and the actual execution price. Thorough data validation and pre-processing are paramount to ensure the reliability of your backtesting results and the performance of your trading algorithms. Having explored the acquisition of tick data from FXCM, the next logical step is to investigate the retrieval of candles data via the FXCM API. Candles, more formally known as open, EEC, low, close, OHLC, bars, represent price movements over a specific time period, e.g., 1 minute, 1 hour, or daily. Retrieving this type of data allows for a different, more aggregated view of the market, suitable for analyzing trends and patterns at a higher level than tick data. The API provides a powerful and flexible method for accessing this data, and the subsequent sections will delve into the specifics of retrieving, processing, and utilizing historical candles data to further enhance our algorithmic trading capabilities. Having explored the fundamental concepts of financial data and the architecture of the FXCM API, we now turn our attention to a crucial aspect of algorithmic trading, tick data. This section will demonstrate how to retrieve and work with tick data using the FXCmpy package, providing you with the tools to access and manipulate this granular level of financial information. Tick data, representing the individual bid and ask prices at each point in time, is the cornerstone of high-frequency trading, HFT, and provides the raw materials for detailed market analysis. Understanding and effectively utilizing tick data is essential for developing sophisticated trading strategies, performing accurate backtesting, and executing strategies in real time. Before diving into the specifics of retrieving tick data, we need to import the necessary Python libraries. These libraries provide the foundation for data manipulation, analysis, and visualization. The following code snippet imports the required libraries. Here is code. To get the code, please check on epicode.substack.com or visit the YouTube channel OnePageCode. Let's break down the purpose of each library. Time. This library provides functions for measuring time intervals, which can be useful for optimizing code execution and monitoring data retrieval performance. NumPy. NumPy is the fundamental package for numerical computing in Python. It provides powerful array objects and mathematical functions that are essential for data manipulation and analysis. Pandas. Pandas is a data analysis and manipulation library. It provides data structures, such as data frames and series, that make it easy to work with structured data, including time series data like tick data. Datetime. The datetime module provides classes for working with dates and times. This is crucial for specifying time periods for data retrieval and for performing time-based calculations. Pylab and Matplotlib.Pyplot. Pylab is a legacy import for Matplotlib. Matplotlib.Pyplot is the core plotting library, providing functions for creating a wide variety of plots and charts. We'll use it to visualize the tick data. Matplotlib. This library provides tools for customizing the appearance of the plots, which is helpful for making your charts more informative and visually appealing. The lines plt.style.use, Saborn, mpl, rcparamsfigure.dpi, equals 100, and mpl, rcparamsfont.family, igual a, serif, configure the plotting environment for a cleaner and more readable look. With these libraries imported, we are now equipped to work with tick data. Before requesting tick data, it's essential to determine which currency pairs, or symbols, are supported by the FXCM API. The FXCmpy package provides a convenient method for retrieving a list of available symbols. In our examples, we'll use the fxcmpy iterator, aliased as TDR, to access the FXCM API efficiently. The following code demonstrates how to retrieve the list of supported symbols. Here is code. To get the code, please check on epicode.substack.com or visit the YouTube channel OnePageCode. Important, replace your FXCM token with your actual FXCM API token. You need to obtain an API token from your FXCM account. The getAvailableSymbols method returns a list of strings, where each string represents a currency pair, such as EURUST, PUST, UTP, etc. The availability of tick data may vary depending on your FXCM account type and the specific instruments offered. It's always a good practice to check the available symbols before requesting data to avoid errors. Now, let's delve into the core functionality, retrieving tick data for a specific currency pair and time period. In this example, we'll retrieve data for EURUST between March 25th and March 30th, 2020. Here is code. To get the code, please check on epicode.substack.com or visit the YouTube channel OnePageCode. In this code, we first initialize the FXCM tick data object, providing our API token. We then define the start and end dates using the datetime.datetime constructor. The hit data function is used to fetch the data. Instrument equals eurust specifies the currency pair for which to retrieve data. Start equals start sets the start date for the data. Stop equals end sets the end date for the data. Period igual a M1, this parameter is not relevant for tick data retrieval, but is required by the getData function. GetRaw equals false, sets this parameter to false to convert the index of the returned data frame into a datetime index. The resulting data is stored in a pandas data frame. The size of the data frame will depend on the time period and the activity of the market. Keep in mind that tick data is incredibly voluminous. The data frame might contain millions of rows, especially for longer time periods. It is crucial to be aware of the time zone of the data. The FXCM API typically provides data in UTC. If you are working with data from a different time zone, you'll need to convert the timestamps accordingly. Let's explore the structure of the data frame we have just created. The data frame contains the tick data, including beat and ask prices, which are the core components of tick data. We'll use info to get a summary of the data frame, showing the data types and number of entries, and head to display the first few rows. Here is code. To get the code, please check on epicode.substack.com or visit the YouTube channel 1PageCode. The info method provides a concise summary of the data frame, including the number of entries, data types of each column, and memory usage. The head method displays the first 5 rows of the data frame, allowing you to quickly understand the structure and content of the data. Here's an example of what the output of head might look like. Here is code. To get the code, please check on epicode.substack.com or visit the YouTube channel 1PageCode. As you can see, each row represents a tick, with the index being the timestamp of the tick. The beat and ask columns contain the corresponding bid and ask prices at that time. Let's demonstrate how to work with a specific subset of the tick data. We'll select a 15-minute subset of the data, from 12 horas to 12 horas 15 minutos on March 25, 2020, and perform some basic analysis. Here is code. To get the code, please check on epicode.substack.com or visit the YouTube channel 1PageCode. In this code, we first define the start and end times for our 15-minute subset. We use log for selecting a specific time range, which is a powerful and efficient way to access data based on the index, the timestamp in this case. We then calculate the mid price by taking the average of the beat and ask prices. We also calculate a simple moving average, FXCM, of the mid price. The rolling method is used to create a rolling window of a specified size, in this case, 5 seconds. Then, the median method calculates the average within that window. Finally, we plot the mid-price and SMA using the plot method, visualizing the price movements and trends within the selected time frame. The resulting plot will show the mid-price and the 5-second SMA, highlighting the short-term price trends. This is a basic example, but it demonstrates how to perform fundamental financial analysis tasks on tick data, providing valuable insights into market dynamics. Let's take this analysis a step further by demonstrating resampling the tick data into a different time frequency and creating additional features. This allows us to analyze the data at different levels of granularity, which is essential for various trading strategies. Here is code. To get the code, please check on epicode.substack.com or visit the YouTube channel 1PageCode. In this advanced example, we first retrieve the tick data as before and calculate the mid price. Then, we resample the data into 1-minute intervals using the resampling method. The OIK function calculates the open, EEK, low, and close prices for each 1-minute interval. We also calculate a 5-minute SMA of the closing price using the rolling and median methods. Finally, we calculate the daily returns using FXCM, which calculates the percentage change between consecutive values. We visualize the resampled data, FXCM, and returns using plots, offering a higher-level view of the market's movements over time. This is a powerful example of data manipulation, demonstrating how to aggregate tick data into different time frames and derive key financial indicators. In this section, we've explored the process of retrieving and working with tick data from the FXCM API using the FXCmpy package. We've covered the essential steps, from importing the necessary libraries to identifying available currency pairs, retrieving data for specific time periods, and performing basic analysis. We've also demonstrated how to work with subsets of the data, calculate the mid-price and SMA, and visualize the results. Furthermore, we explored advanced techniques such as resampling and feature engineering. Tick data is a crucial resource for algorithmic trading, providing the level of granularity required for high-frequency trading and detailed market analysis. The FXCMPy package offers a convenient and efficient way to access and manipulate this data, empowering you to develop sophisticated trading strategies. In the following section, we'll explore how to retrieve and analyze candle data, providing another perspective on historical price movements at different time intervals. Building on our previous exploration of tick data, we now turn our attention to a different, yet equally critical, perspective on market movements, candles data. Understanding and effectively utilizing candles data is paramount for comprehensive market analysis, complementing the granular insights gleaned from tick data. Candles data, also known as OHLC data, open, EEC, low, close, provides a summarized view of price fluctuations within specific time intervals. Unlike tick data, which captures every single price change, candles data aggregates price activity into a single candle for a defined period, such as a minute, an hour, or a day. Each candle encapsulates the following key price points: open, the price at which the asset began trading at the start of the period. EEC, the highest price reached during the period. Low, the lowest price reached during the period. Close, the price at which the asset ended trading at the end of the period. Furthermore, candles data for FXCM incorporates both bid prices and ask prices. This dual representation is crucial because it allows for the analysis of the spread and provides a more accurate picture of market liquidity and price discovery. Therefore, a single candle actually encompasses two sets of OHLC data, one for the bid prices and one for the ask prices. Candles data is a cornerstone of technical analysis. It provides a visually intuitive and readily interpretable format for identifying patterns, trends, and potential trading opportunities. The shape and structure of the candles themselves, eje, bullish or bearish, long or short bodies, presence of wicks, offer valuable insights into market sentiment and the balance between buyers and sellers. While real-time candles data can be derived from an API using tick data, FXCM also provides prepackaged candles data, which can be accessed through a dedicated data reader. This prepackaged approach offers several advantages, including efficiency, historical data availability, and reduced computational overhead. This chapter will delve into retrieving and analyzing this prepackaged data. Before attempting to retrieve candles data for a particular currency pair, it's essential to ascertain which symbols are supported by either data source. The FXCMPy candle data library simplifies this process. This library provides a convenient interface for interacting with the prepackaged candles data. The Geta Bailable Symbols method of the FXCMPy candle data object returns a list of currency pairs for which candles data is accessible. These lists might differ from the symbols available for tick data retrieval or those directly accessible via the FXCM API. It is therefore crucial to always check the available symbols before attempting to retrieve data to avoid errors and ensure the successful execution of your analysis. The following code snippet demonstrates how to use getAvailable symbols. Here is code. To get the code, please check on epicode.substack.com or visit the YouTube channel OnePageCode. In the above code, we import the Candles Data Reader class from the FXCMPy Candle Data module. We instantiate the Candles Data Reader class, creating an object that will allow us to access the data. We call the getAvailable symbols method to retrieve the list of supported currency pairs. Finally, we print the available symbols list, enabling us to see the available symbols for data retrieval. It's important to remember to close the data reader to release resources when you're finished. The output of the print, available symbols, statement will resemble the following. The exact list will depend on the data source and available data. Here is code. To get the code, please check on epicode.substack.com or visit the YouTube channel OnePageCode. This output provides a list of all currency pairs for which candles data can be retrieved. You must use these symbols when requesting data to ensure successful retrieval. If you attempt to retrieve data for a symbol not present in this list, an error will likely occur. Having identified the available symbols, the next step involves retrieving the actual candles data. The process shares similarities with tick data retrieval, but with a crucial addition, the specification of a period. The period defines the length of each candle, essentially determining the granularity of the data. The period parameter represents the bar length or time interval. Several valid period values are typically supported, reflecting common timeframes used in technical analysis. Some examples include M1, 1 minute, 1 minute candles, M5, 5 minutes, 5 minute candles, M15, 15 minutes, 15 minute candles, M30, 30 minutes, 30 minute candles, H1, 1 hour, 1 hour candles, H4, 4 hours, 4 hour candles, D1, 1 day, daily candles, W1, 1 week, weekly candles. The selection of the period depends on the analytical objectives and the trading strategy employed. Shorter periods, eje, M1, M5, provide more granular data, suitable for intraday trading and identifying short-term price movements. Longer periods, eje, H1, D1, offer a broader perspective, aiding in the identification of trends and support /diagonal resistance levels. The following code snippet illustrates how to retrieve candles data, including specifying the date range and period. Here is code. To get the code, please check on epiccode.substack.com or visit the YouTube channel OnePageCode. In the code above, we import the necessary libraries, candles data reader to access the data, datetime to specify the date range, and pandas to handle the data in a structured format, dataframe. We initialize the candles data reader. We define the symbol, eje, eur /diagonal USD, start date, end date, and period, eje, H1. We use the getCandlesData method to retrieve the data. This method takes the symbol, start date, and period as arguments. It is wrapped in a try, except block to handle potential errors during data retrieval, such as invalid symbol or date ranges. If the data retrieval is successful, the first few rows of the resulting pandas data frame are printed using head for a quick preview. Finally, we close the data reader to release resources. This code will retrieve the hourly candles data for euro /diagonal USD for the month of January 2023. The retrieved data is stored in a pandas data frame, ready for analysis. The try, except block is crucial for robust error handling. If an error occurs during data retrieval, the program gracefully handles it and prints an informative message instead of crashing. Understanding the structure of the retrieved candles data is essential for effective analysis. The getCandlesData method returns the data in a pandas data frame, a powerful and versatile data structure for data manipulation and analysis. The data frame has a datetime index as the index, representing the timestamps of each candle. The columns of the data frame represent the OHLC prices for both bid and ask prices, bid open, the opening bid price for the candle. Bid eq, the highest bid price for the candle. Bid low, the lowest bid price for the candle. Bid close, the closing bid price for the candle. Ask open, the opening ask price for the candle. Ask eq, the highest ask price for the candle. Ask low, the lowest ask price for the candle. Ask close, the closing ask price for the candle. Let's examine the structure of the data frame using the info method, which provides a summary of the data types and non-null values. Here is code. To get the code, please check on epiccode.substack.com or visit the YouTube channel OnePageCode. The output of candlesdata.info would look similar to this. Here is code. To get the code, please check on epiccode.substack.com or visit the YouTube channel OnePageCode. This output confirms that the index is a datetime index, indicating the timestamps of each candle. There are 744 entries, corresponding to the number of hourly candles in January, 31 days 24 hours. All columns are of the float 64 data type, representing the numerical price values. There are no missing values, all columns have 744 non-null entries. To further understand the data content, we can examine the last few rows of the data frame using the tal method. Here is code. To get the code, please check on epiccode.substack.com or visit the YouTube channel OnePageCode. The tal method would display the last few rows, showing the closing prices and timestamps. The actual values will depend on the market data for the specified period. Here is code. To get the code, please check on epiccode.substack.com or visit the YouTube channel OnePageCode. Understanding the data structure is crucial for effective analysis. The data frame's organization allows for easy access to specific price data points, time-based filtering, and the application of various analytical techniques. Once the candle's data is retrieved and its structure is understood, we can begin to perform various calculations and apply technical indicators to gain insights into market behavior. A common practice is to calculate the mid price, which is the average of the bid and ask prices. The mid price is often used as a representative price for the asset, providing a smoother view of price movements. The mid-close price can be calculated as the average of the bid close and ask close prices. This can be easily accomplished using the pandas data frame's built-in functions. Here is code. To get the code, please check on fxcmpy.substack.com or visit the YouTube channel 1PageCode. In the preceding code, we retrieve the candle's data as before. We create a new column named Mid Close in the data frame. The Mid Close column is populated by calculating the average of the bid close and ask close columns for each row. We print the first few rows, showing the bid close, ask close, and the newly calculated mid-close prices. The output of print, candles data bid close, ask close, mid close, hit, would look similar to this. Here is code. To get the code, please check on fxcode.substack.com or visit the YouTube channel 1PageCode. This demonstrates how to calculate the mid-close price using a simple arithmetic operation within the pandas data frame. The mid-close column now contains the calculated mid-prices for each candle. Now, let's use the calculated mid-close prices to compute simple moving averages, SMAs. An SMA is a widely used technical indicator that smooths out price data by calculating the average price over a specific period. SMAs help identify trends and potential support/diagonal resistance levels. We'll calculate two SMAs with different time windows, a short-term SMA, eje, 10 periods, and a long-term SMA, eje, 20 periods. Here is code. To get the code, please check on fxcode.substack.com or visit the YouTube channel 1PageCode. In this enhanced code, we retrieve the candle's data and calculate the mid-close prices as before. We use the rolling function with a window parameter of 10 and then 20 to compute the 10-period and 20-period SMAs, respectively, using the mean function. The resulting SMAs are stored in new columns, SMA10 and SMA20. We print the first few rows, including the mid-close, SMA10 and SMA20 to showcase the calculated values. The hit 25 displays the first 25 rows to show the initial periods where the SMAs are being calculated and thus are not yet available. The output of print, candles data mid close, SMA10, SMA20, hit 25, would look something like this. The exact values will vary based on the market data. Here is code. To get the code, please check on fxcode.substack.com or visit the YouTube channel 1PageCode. Notice that the SMA values for the first 9 rows are nan, not a number, because the 10-period SMA needs at least 10 data points. Similarly, the 20-period SMA requires at least 20 data points. After the required data points are available, the SMA values begin to appear. The calculated SMAs can now be used for further analysis, such as identifying potential trend reversals, crossovers, or support/diagonal resistance levels. You can analyze the relationships between the price and the SMAs. For example, if the price crosses above the 20-period SMA, it might indicate a bullish signal, while a cross below might suggest a bearish signal. Finally, to gain a visual understanding of these calculations, you would then plot the mid-close, SMA10, and SMA20 values on a chart. This allows for easy identification of trends, support and resistance levels, and potential trading signals. The chart would depict the price action of the currency pair, along with the two SMAs, providing a clear visual representation of the price trends and the smoothing effect of the moving averages. This plotting process is not covered in the provided code snippet, but it is a standard procedure in technical analysis, often accomplished using libraries such as Matplotlib or Plotly in Python. Referring back to the source material, Figure 9.2 would illustrate a typical visualization of the mid-close price with its two SMAs plotted on top of each other, allowing for a deeper understanding of the data's evolution. In conclusion, Candle's data provides a powerful framework for analyzing price movements. By understanding how to retrieve, inspect, and manipulate this data, including calculating the mid-price and applying technical indicators like SMAs, traders can gain valuable insights into market dynamics and develop more informed trading strategies. This, however, is only the beginning. The next steps would naturally involve expanding on this analysis by adding more complex indicators, backtesting strategies, and building automated trading systems. Having explored the use of prepackaged tick and candle data, we now shift our focus to a more dynamic approach, direct interaction with the FXCM API. This transition is critical for several reasons. Prepackaged data, while useful for initial learning and basic analysis, often lacks the flexibility and real-time responsiveness required for sophisticated algorithmic trading strategies. Furthermore, the prepackaged datasets may not always reflect the full range of instruments or the latest market conditions. By interacting with the API directly, we gain access to a continuous stream of live data, the ability to execute trades programmatically, and control over historical data retrieval. The key to this shift is establishing a connection to the FXCM API, which will be the foundation for all subsequent operations. The following steps will guide you through establishing this crucial connection. We will begin by importing the necessary libraries and then use the FXCmpy package to create a connection object. This connection object will serve as our gateway to the FXCM API, allowing us to request data, place orders, and manage our trading account. We will then retrieve a list of available trading instruments, a crucial step for understanding the range of assets we can trade through the API. These initial steps are fundamental, providing the basic building blocks upon which more complex operations, such as historical data retrieval, order execution, and strategy implementation, will be built. The first step in working with the FXCM API is to import the FXCmpy package. This package provides a convenient Python interface for interacting with the API. To import the package, we use the standard Python import statement. Here is code. To get the code, please check on epicode.substack.com or visit the YouTube channel OnePageCode. This line makes all the functionalities of the FXCmpy package available to us. Now, we need to establish a connection to the FXCM API. This is achieved by creating a connection object. This object will handle the authentication and communication with the API. The FXCmpy package offers several ways to establish this connection. One of the most straightforward methods involves using an API token, which authenticates your access to the API. For security and convenience, we'll use a configuration file. This allows us to store our API token separately from our code, making it easier to manage and preventing accidental exposure of sensitive information. Let's examine the code snippet that establishes the API connection using a configuration file. Here is code. To get the code, please check on epicode.substack.com or visit the YouTube channel OnePageCode. Let's break down this code step by step. Import FXCmpy. This line imports the FXCmpy library, as before. Connection object creation. The core of the connection process is the FXCmpy.FXCmpy constructor. This constructor takes several optional parameters, including the config file parameter. Configuration file, pyalgo.cfg. The config file equals pyalgo.cfg. Argument tells FXCmpy to look for a configuration file named pyalgo. CFG in the same directory as your Python script, or a specified path. This file contains the necessary connection details, including your API token. In the previous chapter, we created a pyalgo.cfg file. If you haven't, create one now. An example configuration file is shown below. Remember to replace your API token with your actual API token. Here is code. To get the code, please check on epicode.substack.com or visit the YouTube channel OnePageCode. The access token is a critical piece of information. It's your unique identifier, and it's used to authenticate your requests to the API. Obtaining a valid API token is essential for connecting to the FXCM API. You can obtain one from your FXCM demo or live account. The host and port parameters specify the server and port to connect to. The log level parameter sets the level of logging information. Error handling, the try, except block handles potential errors during the connection process. If the connection fails, e.g., due to an invalid API token, network issues, or incorrect configuration settings, an error message will be printed, and the program will exit gracefully. This is crucial for preventing unexpected behavior in your trading algorithms. Log level, the log level equals error parameter in the FXCmpy.FXCmpy constructor sets the logging level. Setting the log level to error means that only error messages will be displayed, which can help keep the output clean while you are developing your code. Other options are debug, info, warning, and critical, each with a different level of verbosity. This code snippet demonstrates a robust and secure way to establish a connection to the FXCM API. By using a configuration file, you can separate your sensitive API credentials from your code, improving security and making it easier to manage your API settings. Always ensure you have a valid API token and that your configuration file is correctly set up before running this code. Once you've successfully established a connection to the FXCM API, the next logical step is to explore the available trading instruments. Knowing which assets you can trade is fundamental to any trading strategy. The FXCmpy package provides a simple and effective way to retrieve a list of all the instruments available for trading. This list includes currency pairs, indices, commodities, and cryptocurrencies, offering a diverse range of trading opportunities. Here's the code snippet that retrieves and displays the list of available instruments. Here is code. To get the code, please check on fxcmpy.substack.com or visit the YouTube channel 1PatchCode. Let's break down this code. Establish API connection. The code starts by establishing the API connection, just as we did in the previous section. This is a necessary prerequisite for any API interaction. API.getInstruments, this is the core function for retrieving the list of instruments. The getInstruments method, called on our API connection object, sends a request to the FXCM API to obtain the list of tradable instruments. Instruments variable, the result of API.getInstruments, is stored in the instruments variable. This variable will contain a list of strings, where each string represents a single tradable instrument. Print instruments. This line simply prints the contents of the instruments variable to the console. The output will be a list of strings, each representing an instrument. For example, here is code. To get the code, please check on fxcmpy.substack.com or visit the YouTube channel 1PatchCode. The exact list of instruments will vary depending on your account type and the current offerings from FXCM. Understanding the output is a list of strings. Each string is the symbol for a tradable instrument. The symbols follow a standard format, typically currency pairs, eje, EUR/USD, but also include indices, eje, US30 for the Dow Jones Industrial Average, commodities, eje, XAU/USD for gold, and cryptocurrencies, eje, BTC/USD for Bitcoin. The list can be extensive, providing a wide range of trading opportunities. Instrument types. Let's briefly look at the different types of instruments you might find in the list. Currency pairs. These represent the exchange rate between two currencies, eje, EUR/USD. They are the most common instruments traded in the FX market. Indices. These represent the performance of a group of stocks, eje, US30, SPX 500, NA100. Commodities. These represent raw materials such as gold, XAU/USD, silver, XAG/USD, and all. Cryptocurrencies. These are digital or virtual currencies, eje, BTC/USD, ETH/USD. API.close. It's good practice to close the connection when you're finished with it. This releases resources and prevents potential issues. This simple yet powerful step allows you to understand the breadth of trading opportunities available through the FXCM API. This is essential for selecting instruments for your algorithmic trading strategies and for ensuring that your code is compatible with the available assets. The list of instruments can change over time, so it's always a good idea to run this code periodically to ensure you have the latest information. In this section, we've covered the fundamental steps required to begin working with the FXCM API. We started by importing the FXCmpy package, which provides the necessary tools for interacting with the API. We then established an API connection using a configuration file, ensuring a secure and organized approach to managing our API credentials. Finally, we retrieved and examined a list of available instruments, providing you with the knowledge to identify tradable assets. These steps are the bedrock of any interaction with the FXCM API. By successfully completing these initial steps, you have laid a solid foundation for building more complex trading applications. You are now ready to move on to the core functionality of retrieving historical data. Knowing how to retrieve historical data for specific time intervals is a key capability for backtesting and strategy development. In the next section, we will explore how to use the API to retrieve historical data, allowing us to analyze past market movements and develop and refine our algorithmic trading strategies. You are now equipped to start working with the API and retrieve real market data, paving the way for more advanced analysis and strategy implementation. Having successfully established a connection to the FXCM API in the preceding sections, we can now delve into the crucial process of retrieving historical data. This capability is the cornerstone of robust backtesting, algorithm development, and informed trading strategy creation. While previous examples may have utilized prepackaged or preprocessed datasets, the real power and flexibility lie in accessing and manipulating the raw data directly from the API. This approach offers unparalleled control, allowing you to tailor your data retrieval to specific needs, timeframes, and instruments. The primary tool for retrieving historical price data from the FXCM API is the fxcmpy method. This method is designed to fetch price information for a specified financial instrument, e.g., currency pair, over a defined time period, and with customizable parameters to control the amount and granularity of the data. Think of it as the core function that unlocks access to the historical price action you need for analysis and strategy development. Understanding the syntax and parameters of fxcmpy is fundamental to successfully working with historical data. The basic structure of the method call looks like this. Here is code. To get the code, please check on epicode.substack.com or visit the YouTube channel OnePageCode. Where API is your established FXCM API connection object. Instrument is a string representing the financial instrument you want to retrieve data for, e.g., EUR/USD, GBP/JPY. Period specifies the time interval for the data, e.g., daily, hourly, minute by minute. Quarks allows for additional optional parameters to customize the data retrieval. The period parameter is arguably the most critical element in controlling the granularity of the historical data you retrieve. It determines the time interval represented by each data point, essentially defining the resolution of your price data. Understanding the various options for the period parameter is essential for selecting the appropriate data for your analysis. It is a comprehensive list of valid period values and their corresponding time intervals, M1, 1-minute intervals, e.g., data for each minute. M5, 5-minute intervals. M15, 15-minute intervals. M30, 30-minute intervals. H1, 1-hour intervals. H2, 2-hour intervals. H3, 3-hour intervals. H4, 4-hour intervals. H6, 6-hour intervals. H8, 8-hour intervals. D1, 1-day intervals, daily data. W1, 1-week intervals, weekly data. M1, 1-month intervals, monthly data. The choice of period significantly impacts your analysis. For instance, if you are developing a short-term trading strategy, you might choose M1 or M5 to analyze price movements within minutes. Conversely, for a long-term investment strategy, D1, W1, or M1 might be more appropriate. Selecting the correct period is critical for aligning your data with your analytical goals. Let's put this knowledge into practice. The following code example demonstrates how to retrieve the last 10 days of daily data for the USD/JPY currency pair. Here is code. To get the code, please check on epicode.substack.com or visit the YouTube channel OnePageCode. In this example, we first establish a connection to the FXCM API using your authentication token. Make sure to replace the placeholder with your actual token from your config.ini file, which should have the following format. Here is code. To get the code, please check on epicode.substack.com or visit the YouTube channel OnePageCode. We call the fxcmpy method with the following parameters, USD/JPY as the instrument. D1 as the period, indicating daily data. Number equals 10, which instructs the API to retrieve the 10 most recent days of data. The output, typically, is a pandas data frame. Pandas is a powerful Python library for data manipulation and analysis. The data frame structure organizes the historical price data in a tabular format. Finally, the API connection is closed. The returned data, in this case, is a pandas data frame. Let's examine the typical columns present in the data frame and what they represent. Bid open, the opening bid price for the day. Bid close, the closing bid price for the day. Bid high, the highest bid price for the day. Bid low, the lowest bid price for the day. Ask open, the opening ask price for the day. Ask close, the closing ask price for the day. Ask high, the highest ask price for the day. Ask low, the lowest ask price for the day. Tick T, the number of ticks, price changes, during the day. These columns provide a comprehensive view of the price action for each day. The bid prices reflect the prices at which you could sell the currency pair, while the ask prices reflect the prices at which you could buy it. Understanding these columns is crucial for performing various analyses, such as calculating daily ranges, identifying trends, and implementing trading strategies. Beyond retrieving a specific number of periods, the API also allows you to retrieve data within a defined time range using the start and stop parameters. This is incredibly useful for backtesting strategies over specific historical periods or analyzing events that occurred within a particular timeframe. To use the start and stop parameters, you must provide datetime objects. These objects represent specific dates and times and are essential for precise data retrieval. Let's explore how to implement this. Here is code. To get the code, please check on fxcmpy.substack.com or visit the YouTube channel OnePageCode. In this example, we first establish an API connection, loading your API token from the config.ini file. We define the start and end dates using the datetime object. This allows you to specify the exact time range for which you want to retrieve data. In this example, we are retrieving data from January 1st, 2023, to January 10th, 2023. We then call fxcmpy with the start and stop parameters set to these datetime objects. The period is set to D1 to retrieve daily data for the specified time range of the euro/GBP currency pair. Once the data is retrieved, it's essential to understand its structure. The pandas data frame provides valuable methods for inspecting the data. The info method is particularly useful for quickly assessing the data frame's contents. It displays information such as the number of entries, rows, the data types of each column, eje, float 64, datetime 64, memory usage. Let's illustrate its use. Here is code. To get the code, please check on fxcode.substack.com or visit the YouTube channel OnePageCode. Executing this code will provide a concise summary of the data frame, allowing you to quickly verify the data's structure and data types. This is a critical step for ensuring that your data is correctly formatted for subsequent analysis and calculations. The info method is invaluable for understanding your dataset's composition before you begin any in-depth analysis. Let's explore how to retrieve data with a different period value and visualize the results. This example retrieves 1-minute bar prices, using period equals AML, and plots the closing prices. Here is code. To get the code, please check on fxcode.substack.com or visit the YouTube channel OnePageCode. In this code, we retrieve 1-minute data, period equals AM1, for the euro/USD currency pair, fetching 250 bars. We then use the plot method, which is built into the pandas data frame, to plot the as-close prices. This provides a visual representation of the price movement over the retrieved period. We use matplotlib.pyplot to enhance the plot by adding a title, axis labels, and a grid for readability. The ability to quickly visualize your data is invaluable for understanding its characteristics and identifying patterns. Pandas and Matplotlib, the libraries used in this example, provide powerful and flexible tools for data visualization. This simple plotting example demonstrates how you can quickly transform raw data into a clear and insightful visual representation of price movements. Experimenting with different plotting techniques, eje, line charts, candlestick charts, bar charts, can further enhance your analytical capabilities. It's essential to be aware that the historical data you retrieve might vary depending on the pricing model associated with your FXCM account. Different pricing models have different cost structures, and this can influence factors like the bid-ask spread. The bid-ask spread represents the difference between the price at which you can buy, ask, and sell, bid, a currency pair. For example, if you are retrieving historical data to backtest a trading strategy, the bid-ask spread plays a crucial role. The spread impacts the costs associated with entering and exiting trades. A wider spread will generally increase trading costs, which can affect the profitability of your strategy. Therefore, when evaluating your historical data, it is vital to consider the potential impact of the bid-ask spread and how it might vary depending on your account's pricing model. You might need to factor in the spread when simulating your trades in your backtesting environment to more accurately reflect the real-world trading conditions. Furthermore, ensure that the historical data you use for backtesting aligns with the pricing model of your live trading account. This consistency is critical to ensure that the results of your backtests are a reliable indicator of your strategy's performance in a live environment. In conclusion, the fxcmpy method is a fundamental tool for accessing historical data from the FXCM API. By understanding the period, start, and stop parameters, you can retrieve data tailored to your specific analysis needs. Remember to utilize pandas for data manipulation and visualization, and always consider the impact of your pricing model on the data you retrieve. This knowledge will empower you to effectively analyze historical price action, develop robust trading strategies, and improve your overall trading performance. Having established the foundation of backtesting and strategy development using historical data, the focus now shifts to the dynamic realm of real-time trading. While historical data provides the necessary context for strategy formulation and validation, live trading demands a continuous stream of up-to-the-second market information. This is where real-time, or streaming, data feeds become indispensable. They supply the lifeblood of automated trading systems, enabling them to react to market fluctuations in real time and execute trades based on predefined criteria. The transition to real-time data is a crucial step in moving from theoretical backtesting to practical application. Several brokers and platforms offer real-time data feeds, and understanding how to access and utilize these feeds is a fundamental skill for any aspiring algorithmic trader. Similar to the Audiobook API, the FXCM API, accessed through the FXCmpy wrapper, provides robust capabilities for receiving streaming data. This allows traders to build systems that react dynamically to market changes, providing a crucial edge in fast-moving markets. The core concept behind accessing real-time data with FXCmpy revolves around subscribing to data streams for specific financial instruments. This process establishes a persistent connection to the FXCM server and initiates the continuous delivery of market data. Through this subscription, you can receive updates on the prices of various instruments, including currency pairs, commodities, and indices, as soon as they become available. The FXCmpy wrapper simplifies this process, abstracting the complexities of the underlying API and providing a user-friendly interface for subscribing to and managing data streams. The FXCmpy library provides the subscribe market data method, which is the primary means of initiating a real-time data subscription. However, simply subscribing to the data isn't enough, you need a mechanism to process and utilize the incoming data. This is where callback functions come into play. Callback functions are user-defined functions that serve as the processing engine for incoming real-time data. They are the heart of any real-time data processing system built using FXCmpy. When you subscribe to a data stream, you specify a callback function that FXCmpy will invoke whenever new data arrives. This function allows you to customize how the incoming data is handled, providing the flexibility to build a wide range of trading applications. The versatility of callback functions is a key advantage. They can be designed to perform a multitude of tasks, from simple data logging and visualization to complex analysis and automated trading signal generation. You can use them to print data to the console, for basic monitoring and debugging. Store data in a database, for historical analysis and strategy backtesting. Calculate technical indicators, such as moving averages, RSI, or MACD. Generate trading signals, based on predefined rules or complex algorithms. Execute trades, automatically place and manage orders based on calculated signals. Visualize market data, display price charts, indicators, and trading signals in real time. The possibilities are virtually limitless, constrained only by your imagination and programming expertise. By carefully designing your callback functions, you can tailor the real-time data processing to perfectly match the needs of your trading strategy. To illustrate the fundamental concept of callback functions, let's start with a simple example. The following Python code defines a callback function named output that prints selected elements of the incoming market data to the console. Here is code. To get the code, please check on epicode.substack.com or visit the YouTube channel OnePageCode. Let's break down this code step by step. Import necessary libraries. The code begins by importing the pandas library for time series data manipulation and the datetime module for date and time handling. Define the output function. This function is designed to receive the real-time data updates. It takes two arguments, data and data frame. The data argument is a dictionary containing the market data, including the instrument symbol, the bid price, the ask price, and the timestamp. The data frame argument is a pandas data frame that can contain historical data. In this specific example, data frame isn't explicitly used, but its inclusion is a standard practice in FXCmpy callback functions, allowing for potential integration with historical data. Error handling: the code incorporates a try, except block to handle potential errors that might arise during data processing. This is crucial for robust applications. Specifically, it catches key error exceptions, which can occur if a required key is missing from the data dictionary, e.g., if the data feed is temporarily unavailable. It also catches any other unexpected exceptions. Extract data elements: inside the try block, the code extracts specific data elements from the data dictionary, the instrument symbol, the timestamp, updated, the bid price, bid, and the ask price, ask. Timestamp formatting: the PD to datetime function is used to convert the timestamp from milliseconds since the epoch to a more readable datetime format. This is important for easily understanding the time of the data updates. The unit equals AMS argument specifies that the timestamp is in milliseconds. Print formatted output: finally, the print function displays the extracted data elements in a formatted string. The output includes the length of the data frame, even though it is not used in this specific example, the instrument symbol, the formatted timestamp, and the bid and ask prices. This simple callback function provides a basic framework for processing real-time data. It demonstrates how to access the data elements, format the timestamp, and print the data to the console for monitoring purposes. This is a crucial starting point for any real-time trading application. Now that we've examined the structure of a callback function, let's see how to integrate it with the FXCmpy API to subscribe to a real-time data stream. The following code demonstrates how to subscribe to the Euro/USD currency pair and receive data updates using the output callback function defined earlier. Here is code. To get the code, please check on epiccode.substack.com or visit the YouTube channel OnePageCode. It is a breakdown of the code. Import necessary libraries. This code imports FXCmpy, time, pandas, and datetime. Establish the connection. The code initializes an FXCmpy object. This is your gateway to the FXCM API. It requires your API access token and specifies the server to connect to, in this case, the demo server for testing purposes. Error handling is included to catch potential connection failures. Define the output callback function. The output function, identical to the one presented earlier, is defined to handle incoming market data. Subscribe to market data. The core of the code is the API.subscribeMarketData method. The first argument, EUR/USD, specifies the instrument symbol for which you want to receive data. The second argument is a tuple containing the callback function. In this case, it's output. The comma is crucial. It creates a tuple containing a single element. Asynchronous data processing. The subscribeMarketData method operates asynchronously. This means that the script continues to execute after the subscription is initiated. The callback function, output, is invoked automatically whenever new data becomes available. Simulating data reception. The time.sleep (DS) function is included to allow the script to run for 10 seconds and receive data updates. Without this, the script would subscribe, print the subscription message, and immediately terminate, without giving the callback function a chance to be called. Connection closure. Finally, the API.close method is called within a finally block. This is essential to close the connection to the FXCM API, release resources, and prevent potential errors. The finally block ensures that the connection is closed, regardless of whether any exceptions occurred during the subscription process. When you run this code, you should see a stream of market data printed to the console, similar to the following. Here is code. To get the code, please check on epiccode.substack.com or visit the YouTube channel OnePageCode. The output displays the instrument symbol, the timestamp, in a readable format, and the bid and ask prices for each data update. The data frame length will be 0 because the function doesn't utilize the historical data frame passed in. The timestamp will update continuously, reflecting the real-time nature of the data feed. This demonstrates the successful subscription to the Euro/USD data stream and the processing of the incoming data by the output callback function. While the streaming data provides a continuous flow of information, you might occasionally need to retrieve the most recent price at a specific point in time. The FXCmpy API provides the getListPrice method for this purpose. This method returns a snapshot of the last available price, including the bid, ask, EK, and low prices for a specified instrument. It is how you can use the getListPrice method. Here is code. To get the code, please check on fxcode.substack.com or visit the YouTube channel 1PatchCode. In this example, connection establishment, the script initializes the FXCM API object, establishing a connection to the FXCM API using your access token. Retrieving the last price, the API.getListPrice, EUR/USD, method is called to retrieve the last available price for the EUR/USD currency pair. Output, the print function displays the last price, which will be a dictionary containing the bid, ask, EK, and low prices. Connection closure, the API.close method, within the finally block, closes the connection. The output will look like this, the actual values will vary. Here is code. To get the code, please check on fxcode.substack.com or visit the YouTube channel 1PatchCode. The getListPrice method provides a snapshot of the most recent data available at the time of the call. It's important to understand the distinction between this method and the streaming data approach. getListPrice is a single, synchronous request. It retrieves the data once and provides a static snapshot. In contrast, the streaming data subscription provides a continuous stream of data updates, processed asynchronously by the callback function. The streaming data is the more powerful mechanism for building real-time trading systems. To stop receiving real-time data updates and prevent the callback function from being invoked, you must unsubscribe from the data stream. The FXCM API provides the unsubscribe market data method for this purpose. Here's an example of how to unsubscribe from the EUR/USD data stream. Here is code. To get the code, please check on fxcode.substack.com or visit the YouTube channel 1PatchCode. In this example, subscription, the code first subscribes to the EUR/USD market data, as shown in the previous example. Unsubscription, the API.unsubscribe market data, EUR/USD, output, method is then called to unsubscribe from the data stream. The first argument is the instrument symbol, and the second argument is the callback function to be unsubscribed. It is crucial to provide the exact same arguments used during the subscription to ensure successful unsubscription. Simulating unsubscription, after unsubscribing, the script waits for a brief period, using time.sleep, DOS, to allow the API to process the unsubscription command. Connection closure, the API.close method is called, ensuring the connection is closed. When you run this code, you'll see the data updates printed to the console for a short period, 5 seconds, as specified by etime.sleep, followed by the unsubscribed from EUR/USD market data message. After the unsubscription, the callback function will no longer be invoked, and no further data updates will be received. In summary, retrieving and processing real-time streaming data with FXCM and the FXCM API package involves the following key steps: establish a connection, initialize an FXCM API object, providing your API access token and the server URL. Define a callback function, create a user-defined function to process the incoming data. This function will be invoked whenever new data arrives. The callback function's primary purpose is to handle the incoming data and perform any desired actions, such as printing data, calculating indicators, or generating trading signals. Subscribe to a data stream, use the API.subscribeMarketData method to subscribe to the data stream for the desired instrument. Pass the instrument symbol and the callback function as arguments. Process data in the callback function. The callback function will be automatically invoked whenever new data arrives, allowing you to process the data in real time. Within the callback function, you can access the data elements and perform any necessary calculations or actions. Unsubscribe from the data stream. Optional, use the API.unsubscribeMarketData method to stop receiving data updates. This is important to prevent unnecessary resource consumption and ensure that the callback function is no longer invoked. Close the connection. Always close the connection to the FXCM API using the API.close method to release resources and prevent potential errors. The power of real-time data processing lies in the flexibility and customization provided by callback functions. By carefully designing these functions, you can tailor the data processing to meet the specific requirements of your trading strategy. This is the foundation for building sophisticated, automated trading systems that can react to market changes in real time and execute trades based on predefined criteria. Building on these fundamental concepts, we can now explore more advanced strategies and techniques for leveraging real-time data to create profitable trading systems. For example, the next step might be to explore how to integrate these real-time data streams with trading signal generation and automated order execution. Having covered the essential aspects of connecting to the FXCM API and retrieving market data, we can now delve into the core functionality of order placement. The FXCM API provides a comprehensive suite of order types, mirroring the capabilities available in the FXCM trading platform. This allows for sophisticated trading strategies to be implemented programmatically. However, for introductory purposes, and to keep things straightforward, we will initially focus on the most fundamental order types, market buy orders and market sell orders. These basic order types are the building blocks upon which more complex trading algorithms can be constructed. Mastering these will provide a solid foundation for more advanced order management techniques such as stop-loss and take-profit orders, which we will explore later. Before placing any new orders, it is crucial to check the current state of your account. Specifically, you will want to determine if any open positions already exist. This step is vital for algorithmic trading as it prevents unintentional actions, such as opening multiple positions when only one is desired, or accidentally closing positions prematurely. The FXCM API provides a straightforward method for checking open positions. The API.getOpenPositions method is the primary tool for retrieving information about currently open positions. This function returns a data frame, a tabular data structure commonly used in Python for data analysis and manipulation. The data frame will contain detailed information about each open trade, including the currency pair, position size, entry price, and current profit/loss. If no positions are open, the API.getOpenPositions method returns an empty data frame. This behavior allows us to easily determine if we need to take any special actions before placing a new order. Here is code. To get the code, please check on epicode.substack.com or visit the YouTube channel OnePageCode. In the above code, we first call API.getOpenPositions and store the returned data frame in the openPositions variable. We then print the data frame to see the contents. Finally, we use the empty attribute of the data frame to check if it contains any rows. This is a clean and efficient way to determine the presence of existing positions. If the data frame is empty, we print a message indicating that no positions are open. Otherwise, we print the data frame, displaying the details of any existing open trades. Once you've confirmed that you're ready to open a new position, the next step is to execute a market buy order. Market buy orders are the simplest type of order. They are executed immediately at the best available price. The FXCM API provides the create market buy order method for this purpose. This method requires two main parameters: the currency pair to trade, eje, EUR/USD, and the desired position size. The position size is typically specified in units, which correspond to the contract size for the currency pair. For example, a position size of 100 for EUR/USD typically represents 100,000 units, or one standard lot. However, the exact contract size may vary depending on the account type and the specific instrument. Always verify the contract size for the instrument you are trading before placing a market order. Let's look at an example. Here is code. To get the code, please check on epicode.substack.com or visit the YouTube channel OnePageCode. In this example, the line order equals API.createMarketBuilder, EUR/USD, 100, attempts to create a market buy order for the EUR/USD currency pair. The value 100 signifies the desired position size, which, as mentioned before, typically corresponds to 100,000 units. The API will attempt to execute this order immediately at the prevailing market price. The result of the createMarketBuilder method is stored in the order variable. The exact contents of the order variable will vary depending on the API implementation, but it will typically contain information about the placed order, such as the order ID, the currency pair, the quantity, and the execution price. We've included a try, except block to gracefully handle any potential errors that might occur during the order placement process, such as insufficient funds or market unavailability. This is a critical practice for robust algorithmic trading. After placing a market order, it's essential to verify its execution and view the resulting open positions. The API.getOpenPositions method, which we used earlier to check for existing positions, is also used for this purpose. To make the output more readable, you can select specific elements to display from the returned data frame. For example, you might only be interested in the trade ID, the position size, in thousands, the currency pair, the gross profit / diagonal loss, and whether the position is a buy or sell. We can achieve this by creating a list of column names and using this list to filter the data frame. Here is code. To get the code, please check on fxcode.substack.com or visit the YouTube channel OnePageCode. In this code, we first define a list called cell containing the column names we want to see in the output. We then call API.getAppendPositions to retrieve all open positions. After receiving the full data frame, we use the cell list within square brackets, cell, to select and display only the specified columns. This provides a concise and easily interpretable view of the open positions. The output will display the details of any open positions in a tabular format. Trade ID, a unique identifier for the trade. Amount K, the position size, in thousands of units, eje, 100 represents 100,000 units. Currency, the currency pair for the trade, eje, EUR/USD. Gross PL, the gross profit or loss of the position, in the account-based currency. Is-buy, a Boolean value indicating whether the position is a buy, true, or sell, false. To further illustrate the process, let's open another market by order, this time for a different currency pair. This will demonstrate how to manage multiple open positions simultaneously. Here is code. To get the code, please check on fxcode.substack.com or visit the YouTube channel OnePageCode. In this code, we create a market by order for Euro/GBP with a position size of 50, representing 50,000 units. After the order is placed, we display the open positions using the cell list we defined earlier. The output will now show details for both the Euro/USD and Euro/GBP positions. This allows you to monitor the performance of multiple trades simultaneously. In addition to opening positions, it's crucial to understand how to close or reduce existing positions. The create market order method is used for this purpose. It works in a similar manner to create market order, but instead of opening a new long position, it either closes an existing long position or reduces its size. This method allows you to exit trades or adjust your position size based on market movements or your trading strategy. The following examples will demonstrate how to use the create market order method. Here is code. To get the code, please check on fxcode.substack.com or visit the YouTube channel OnePageCode. In the first example, we use create market order EUR/USD 25 to sell 25,000 units of Euro/USD. These will reduce the existing long position by that amount. The second example uses create market order EUR/GBP 50 to increase the Euro/GBP position by 50,000 units. By examining the output of API.getAppendPositions, cell after each order, you can track the changes in your open positions and verify the correct execution of your trades. To close all open positions for a specific currency pair, you can use the close for symbol method. This is a convenient way to quickly exit all trades in a particular instrument. Here is code. To get the code, please check on fxcode.substack.com or visit the YouTube channel OnePageCode. In this example, API.close for symbol, EUR/GBP, closes all open positions in the Euro/GBP currency pair. Afterwards, we print the open positions to confirm that the Euro/GBP positions are no longer present. Finally, to close all open positions in your account, regardless of the currency pair, use the close all method. This is a powerful command that will liquidate all of your open trades. Use it with caution and ensure that you understand its implications before executing it. Here is code. To get the code, please check on fxcode.substack.com or visit the YouTube channel OnePageCode. In the final example, API.closeAll closes all open positions in the account. The final call to API.getAppendPositions should return an empty data frame, confirming that all positions have been closed. Important note, in FXCM demo accounts, the default account type is often set up as a hedge account. In a hedge account, you can have both long and short positions on the same instrument. However, the demo account does not net long and short positions on the same instrument. This means that if you have a long position and a short position on the same instrument, they will be treated as separate positions, and closing one position does not automatically close the other. This behavior can differ in live trading accounts, so be aware of your account type and the implications for order management. By mastering the concepts of market buy and sell orders and the methods for managing your open positions, you've now laid a solid foundation for building more sophisticated trading strategies using the FXCM API. Having explored the mechanics of placing and managing orders, it's time to move beyond the specifics of individual trades and delve into the broader context of account information. The FXCM API isn't just limited to providing data on open positions, it offers a comprehensive view of your trading account, allowing you to retrieve key details about your current financial standing. This information is crucial for making informed trading decisions, monitoring risk, and ultimately, managing your overall trading strategy. We'll now explore how to access and interpret this critical data. When trading on a platform like FXCM's, a user may have multiple trading accounts. These could be for various reasons: to test different strategies, manage funds separately, or to comply with regulatory requirements. To simplify operations, the platform designates one account as the default account. This is the account that is typically selected when you log in, and it's often the account where new trades are placed unless explicitly specified otherwise. The FXCM API provides a straightforward way to determine which account is currently set as the default. This is especially useful in automated trading systems, where you need to ensure that trades are executed on the correct account. To retrieve the default account ID, you can use the getDefaultAccount method. Here is code. To get the code, please check on epicode.substack.com or visit the YouTube channel OnePageCode. In this code snippet, after initializing the FXCMPy object with your access token and server, remember to replace your access token with your actual token and specify either demo or real, the API. GetDefaultAccount method is called. This method queries the FXCM servers for the default account associated with your credentials. The result, which is typically a numerical ID, is then printed to the console. The try, except, finally block handles potential errors gracefully, ensuring the API connection is closed regardless of success or failure. The output of this code will be a single numerical value, for instance, 123-4567. This ID represents your default trading account. Understanding this is a prerequisite for many subsequent operations, as it allows you to target specific accounts when placing orders, retrieving account summaries, or analyzing trading performance. While knowing your default account is essential, a more comprehensive understanding of your account's financial situation is critical for effective trading. The FXCM API offers a method to retrieve a detailed overview of your trading accounts. This provides a wealth of information, including account balances, equity, margin usage, and profit/loss figures. This detailed data is invaluable for risk management, strategy evaluation, and real-time monitoring of your trading activity. To access this detailed information, you'll use the API.getAccounts method. This method returns a data structure containing various financial metrics related to your trading accounts. Let's examine the code and then break down the returned data. Here is code. To get the code, please check on epicode.substack.com or visit the YouTube channel OnePageCode. In this updated code, we first retrieve the account data using API.getAccounts. The result is a dictionary-like structure. To make the data more easily readable and analyzable, we convert it into a pandas data frame using PD data frame, @constdata. The T transposes the data frame, effectively swapping rows and columns. This presents the data in a more intuitive format, with each account as a row and each financial metric as a column. The try, except, finally block is included to ensure robust error handling and proper resource management. The output, after running the code, will look similar to the following, though the specific values will vary depending on your account's activity. Here is code. To get the code, please check on epicode.substack.com or visit the YouTube channel OnePageCode. Let's dissect the key data points and their significance within the context of financial trading. @contide, this is the unique identifier for the trading account, the same as the one retrieved using getDefaultAccount. This column is essential for identifying the specific account to which the other data points relate. Balance, this represents the total amount of funds available in your trading account. It includes all cash deposits, realized profits and losses, and any adjustments. The balance is your starting point and a crucial indicator of your overall financial standing. Equity, this is the current value of your account. It's calculated as balance plus unrealized profit / loss. Equity reflects the total value of your account, taking into account both the funds available and the current market value of any open positions. If you have open trades, their floating profit or loss will impact your equity. Usable margin, this indicates the amount of funds available to open new trading positions. It's calculated as equity, usable margin. Margin is the collateral required to open and maintain a position. Usable margin tells you how much additional capital you can deploy to take on new trades without exceeding your margin requirements. Day PL, this represents the profit or loss generated from trades closed during the current trading day. It provides a snapshot of your daily trading performance, allowing you to assess the effectiveness of your strategy on a short-term basis. Gross PL, this reflects the total profit or loss of all open positions. This is a floating profit or loss, as it's based on the current market prices and can change rapidly. Hedging, this is a Boolean value, true/false, that indicates whether hedging is enabled on the account. Hedging allows traders to open both buy and sell positions on the same currency pair simultaneously. This can be useful for managing risk or implementing complex trading strategies. Not all brokers permit hedging, and its availability depends on your account type and the regulatory environment. Currency, this specifies the currency in which the account is denominated, EG, USD, EUR, GBP. All monetary values, such as balance, equity, and margin, are expressed in this currency. Understanding these metrics is fundamental to effective trading. By monitoring your account information regularly, you can assess risk, track your margin usage to ensure you're not over-leveraged. Manage capital, monitor your equity and balance to ensure you have sufficient funds to trade. Evaluate performance, analyze your day PL and gross PL to gauge the success of your trading strategies. Make informed decisions, use this information to adjust your trading plans and risk parameters as needed. The ability to access and interpret account information opens up a wide range of possibilities for automated trading strategies and advanced analysis. Let's explore some practical applications. Automated risk management. You can create a script that continuously monitors your usable margin and, if it falls below a predefined threshold, automatically closes some or all of your open positions to reduce your exposure. Here is code. To get the code, please check on fxcmpy.substack.com or visit the YouTube channel OnePageCode. This code monitors the usable margin and, if it falls below a set threshold, closes any open positions. This helps prevent margin calls and protects your account from excessive losses. The time.sleep, 60, function allows the script to run continuously, checking the margin every minute. Dynamic position sizing, you can dynamically adjust the size of your trades based on your account equity and risk tolerance. For example, you could calculate a percentage of your equity to risk on each trade, ensuring that you never risk more than a predefined amount of your capital. Here is code. To get the code, please check on fxcode.substack.com or visit the YouTube channel OnePageCode. This code calculates the appropriate trade size based on your account equity, risk percentage, and the distance to your stop-loss order. This ensures that your risk is proportional to your account size, helping to protect your capital. Performance reporting and analysis, you can use the account information, along with data from previous trades, to generate detailed reports on your trading performance. This can include metrics like win/loss ratios, average profit/loss per trade, and drawdown analysis. Here is code. To get the code, please check on fxcode.substack.com or visit the YouTube channel OnePageCode. This code retrieves your closed trades from the API and calculates key performance indicators, such as win/loss percentage, average profit/loss per trade, and the size of your largest wins and losses. This data can be used to evaluate the effectiveness of your trading strategy. By leveraging the account information provided by the FXCM API, you can create sophisticated trading systems that are not only capable of executing trades but also of managing risk, analyzing performance, and adapting to changing market conditions. This data is the cornerstone of responsible and effective algorithmic trading. The ability to access and interpret your account information is a fundamental step in mastering the FXCM API and utilizing it to its full potential. This knowledge is essential for any trader, regardless of their experience level, and forms the basis for building robust and successful trading strategies. As you move forward, remember that understanding your account's financial health is just as crucial as understanding the markets themselves. Let's conclude this exploration of the FXCM RESTful API for algorithmic trading. This chapter has served as a practical introduction to the core elements of automating trading strategies using FXCM's powerful API and the convenient FXCMPy wrapper. We've aimed to provide a solid foundation upon which you can build more sophisticated and complex trading systems. The journey began with understanding the fundamental principles of algorithmic trading and the advantages it offers, such as speed, objectivity, and the ability to execute strategies consistently. We then dove into the specifics of the FXCM API, focusing on the crucial aspects that enable automated trading. Let's recap the key topics we have covered. Setting up the development environment. We established the necessary environment, including installing FXCMPy and obtaining the necessary API credentials, allowing us to connect to the FXCM platform. This initial setup is the bedrock upon which all subsequent operations rely. Connecting to the FXCM API, we explored the methods for establishing a connection to the API, authenticating with your credentials, and ensuring a stable connection to receive real-time data and execute trades. This connection is the gateway to interacting with the FXCM platform. Retrieving market data. The ability to access real-time market data is essential for any algorithmic trading strategy. We examined how to retrieve price quotes, including bid and ask prices, and how to access historical price data. The ability to interpret and use this information is critical to making informed trading decisions. Submitting and managing orders. We learned how to submit various order types, market, limit, stop, and how to monitor and manage these orders. This is the core functionality for executing trading strategies. Understanding order types and order lifecycle management is critical for controlling risk and optimizing trade execution. Implementing a simple trading strategy, we developed a basic strategy to illustrate how the concepts come together, showing how to combine market data retrieval, order submission, and order management to automate trades. Handling exceptions and error conditions. Robust error handling is critical for any algorithmic trading system. We discussed how to identify, manage, and respond to errors that may arise during the API interaction, ensuring the reliability of the system. Understanding API rate limits. We touched upon the importance of managing API rate limits to prevent your applications from being throttled or blocked. Basic backtesting implementation. We explored the concept of backtesting, using historical data to evaluate the performance of a trading strategy before deploying it live. Practical examples and code walkthroughs. We provided numerous practical examples and detailed code walkthroughs to illustrate each concept. This structured approach has equipped you with the necessary knowledge to begin experimenting with algorithmic trading on the FXCM platform. It's crucial to understand that the FXCM API, along with the FXCMPy wrapper, offers a far more extensive range of functionalities than what we've explored in this chapter. We've focused on the essential components, the basic building blocks, necessary for getting started. Consider this a starting point. For instance, we've primarily focused on trading currency pairs. However, the FXCM API supports trading a variety of financial instruments, including precious metals, commodities, and indices. The FXCMPy wrapper provides efficient methods for accessing and managing these instruments. Beyond the fundamental order types, the API supports more advanced order types and features. You can, for example, implement more sophisticated order management strategies, such as trailing stops, or use OCO, one cancels other, orders to manage risk and execute complex trading plans. The FXCMPy library itself has a rich feature set that provides functionalities for data analysis, event-driven programming, and real-time monitoring of trades, which can be integrated into your trading systems. You can extend your systems by integrating machine learning models for predictive analysis and trade signal generation. While this chapter has presented a foundation, there are ample opportunities to build upon this knowledge to create more sophisticated and robust trading strategies. FXCM is not alone in offering sophisticated APIs for algorithmic trading. Oanda, another prominent player in the retail foreign exchange market, also provides a robust API and platform for automated trading. Both FXCM and Oanda share a common characteristic: they provide a wide selection of financial instruments and APIs specifically designed for automated trading strategies. The choice between these platforms, or others, often depends on factors such as the availability of specific instruments, the quality of the API documentation, the ease of use, and the specific features offered by either platform. However, the core principles of algorithmic trading, such as data retrieval, order submission, and risk management, remain consistent across platforms. This shared foundation makes it easier to transition between different platforms as your needs evolve. Now that you have a solid understanding of the fundamentals, you're well prepared to explore more advanced concepts and strategies. The journey of learning and implementing algorithmic trading is continuous. The next chapter will delve into more complex order types, advanced risk management techniques, and exploring the implementation of more complex trading strategies to take your knowledge and skills to the next level. We will be building upon these essential components, taking a deeper dive into real-world algorithmic trading. We'll also look at ways to optimize your code and improve your trading performance. Get ready to explore the next stage of your algorithmic trading journey.